What in the world is a cash flow statement? That's today's show. Let's dive into it. Hey everyone, I'm Clayton Morris.
I'm Natalie Morris.
And when you are done watching this show, I think you'll have a high-level understanding of what in the world a cash flow statement is and how maybe it's different than a balance sheet and how it's different than an income statement and why it's kind of a good marker to show you the health and wellness of your company and of your investing strategy, right?
That's right. So a lot of times when you are applying for a loan or you're, working with financial people, they'll say, okay, we need your financials. What they usually mean by that, not just your bank statements and your tax returns, but they also may want a balance sheet, which we've talked about before, an income statement, and a cash flow statement. Now, if you're a public company, these things are required. Actually, the SEC has made it clear that you need to have these things as, reporting to your shareholders and the government. Now, if you are just a real estate investor who has an LLC that owns 1 or 2 homes, you don't have to have a cash flow statement, right? You have to have some yearly reportings. You have to have a tax return, clearly, right? But the cash flow statement is for you to sort of gauge the health of your investment and see how does the money actually come in and come out.
So who are we? Well, we are longtime real estate investors. We left our day job a number of years ago to focus on the passive income and the cash flow from our investment properties, our buy and hold rental properties. That's the vehicle that we use to build financial freedom. So for us, we use a cash flow statement really at the end of the year to look at overall. It's not something we're analyzing every day, and it's not something we're analyzing every month. But at the end of the year, it really gives you a strong snapshot that, oh, wow, I spent a lot on cabinets this year. I spent a lot on these other debt items. But was my cash coming in from our tenants, was that sustainable? Did we do well this year?
Right. Now, I know I've talked many times on this show, or if you're new to this show, you know that I'm the spreadsheet junkie. And I'm very comfortable tracking our wealth with balance sheets and income statements. The cash flow statement is actually something I ask for from my accountant. It's not something that I do on my own, although my father, he says that he lives and dies by his cash flow statement, and it's what keeps him up at night. I guess I just don't work that way. I worry more about the balance sheet. So we don't have a giveaway for you, but there's so many that you can get on the internet if you want. But basically, the cash flow statement is going to delineate the types of cash that you have coming in, right? So let's pretend that you own an apartment complex or a few rental real estate properties inside of one LLC, and you're thinking of making a cash flow statement for that LLC. Well, then you're going to write down how exactly does that LLC make money, right? So for the most part, it's going to be rental income. Right.
So it's going to be rental income. I don't know any other way that LLC was making money this year, but typically it's going to come from the rent from your tenants, right? So you're going to write down all of the cash that came in from those tenants for that year in that LLC. Now, maybe you had 5 properties. One of them was vacant for 2 months, but the other ones were burning and churning. That's the sum for that whole year, how much cash was coming in. And then you're going to look at that compared to the amount of expenses that went out the window, right?
Right, exactly right. So if you weren't just a real estate investing company, but instead maybe you were a baker, right? So you're going to look for cash from actual sales, but maybe you had an affiliate sale with a coffee store down the street, so they paid you some money for referrals, or there may be a lot of businesses have all kinds of ways that they make money, so that would be on the cash flow statement. Depreciation on your properties does not go on your cash flow statement, though, even though that is sort of a way you're making money, sort of, because you're paying less in taxes. That's not income, right? So we're only talking about actual income, not credit for income or anything like that.
Right. All right. So cash flow statement shows really the health and wellness of your overall investing, your company, and things that would be on there are like your interest payments.
This is cash going out, right? So what we just talked to you is cash going in, right? Now, another important part of the cash flow statement is cash going out. So then you're going to write well, you've got taxes. Clearly, you've got insurance, right? Maybe you have some debt service, like the loan that you have on those properties. You are paying a property manager, I would hope.
Maybe your lawyer team.
Your legal team, right? If you pay someone's salary, right? Like your property manager, maybe you pay on salary. I don't know. That's possible.
Maybe there's a handyman that lives in the building.
Right. You pay yourself a salary, right? So when you actually stack those two things up against each other, how much cash is coming in and what you're using your cash for, well, that's how you then judge the health of a company. A lot of times, you know, if you flip on CNBC when one company is reporting annual earnings and you see everyone has an opinion about the cash flow statement, right? Like, oh, like they only spend this much on research and development, like, you know, or Apple spends too much in research and development, right? This is where people can sort of judge what you're doing with your money. Now, that's not the point of you as a small business owner having a cash flow statement, but it is really for you to judge, okay, what expenses are acceptable and what here maybe is not.
I really think at the end of the day, a cash flow statement is really important because people can be allured, almost like a vampire putting you in a trance about your investments. And you can think that, wow, I'm doing great. I'm getting all this money from my tenants. But then you're really not paying attention to those expenses that have been mounting or adding up over the course of time, right? That there are these expenses that you might not have thought about. There are these things that are adding up. And then when you get to the end of the year, maybe it's a wash. Maybe all of the profit you made completely went out the window in the roof repairs and the property management fees and all of these other things that you didn't account for. So a balance sheet is great, right? A balance sheet can show you that you own a $50,000 asset versus the car that's a liability. But the cash flow statement can really show you, wait a second, these 10 rental properties, these are junk. Like maybe these aren't performing at the level that I thought they were.
Right.
And it can give you an opportunity to rethink your overall portfolio and maybe sell off the dogs in your portfolio.
Exactly.
Right?
Yeah. It's just a great way to take a temperature of how well your business is doing. Yeah.
So that's a cash flow statement at a 30,000 foot level. We hope you found this useful, and we hope you subscribe to this channel because we've got a ton of great resources here to help you become a smarter, more financially intelligent investor. And please download our Freedom Cheat Sheet. It's right here. You can download it and it'll help you figure out how many rental properties it will take for you to be financially free. So until next time, go out there. Take action, become a real estate investor. We'll see you next time here on the show, everyone.